Welcome to this emergency episode, during which Andrew and I will walk you through some of the implication of the Chancellor's announcement in the budget of the abolition of the non-dom status and changes to IHT. We're going to dive straight into this, so Andrew, please explain the highlights to us.
Sure. So the big news here is that with effect from 6th of April 2025, domicile will no longer really be a relevant concept at all for most UK taxes. In particular, the way the UK taxes people coming into the country will be based on how long they're resident and not on where they're domiciled. There will be actually favourable rules applying to those coming to the UK who've not lived here for the previous 10 years. That means that expats returning to the UK after a period abroad will get the same benefits as a non-dom coming to the UK for the first time. And those benefits will only last for the first 4 years of residence, but the reliefs during that period are more generous than under the current system. And that's because for the first 4 years of residence, you won't be taxed on your foreign income or gains at all. And that means you will actually be able to bring those funds into the UK free from tax. So in other words, for the people affected in that first 4 year period, there will be no remittance basis of taxation and no foreign taxation. IHT rules are also going to change, and I think we'll talk about those in a minute.
Sure. So the question then is, what's the position for non-doms who are in the UK already? And the first thing to say is that there are going to be some transitional provisions to soften the blow of becoming taxable on worldwide income and gains. A temporary repatriation facility, a TRF, will be available for 24 months from 6th of April 2025. Now, this will enable historic foreign income and gains which were not taxed whilst the individual was on the remittance basis to be remitted to the UK at a reduced rate of tax of 12%. Now, this really will appeal to many of those affected, and I think will encourage funds to be brought into the UK. In addition, anyone who moves from the remittance basis to the arising basis on 6th of April 2025 will pay tax only on 50% of their foreign income in 25-26. Now, unfortunately, this relief only applies to income and not to foreign capital gains. And we think this is because there are other transitional reliefs that will be given, which is that ex-remittance basis users will be able to rebase their capital assets to the value at 5 April 19. In other words, if you had assets that you owned at 5 April 19, you will only pay tax on the growth in value from then and not on the full capital gain that will arise.
Yep.
Now, it has to be said, we don't know why that date has been chosen, and it seems a little bit odd, but, we think we're stuck with it.
Agreed. Another unexpected change is that settlor interested trusts, so where the settlor has been UK resident for more than 4 years and they've retained an interest in a trust they set up, in those situations, the trust will lose its current protection from income tax and capital gains tax. Now, at the moment, foreign income and capital gains arising in those trusts don't get taxed until somebody gets a benefit in the UK. But from April 2025, the income and gains of those offshore trusts will be taxed directly on the UK resident settlor, as if he or she had received the money personally. That's a big change, and It's a big disadvantage for trusts.
And remember, though, that is only for settlor interested trusts. If you haven't got a settlor interested trust, the existing rules actually continue to apply.
No change at all to those.
Yeah. The final big change is in relation to inheritance tax. Now, as a reminder, currently non-domiciles are not subject to IHT on their non-UK assets unless they have been UK tax resident for 15 out of the previous 20 years. So As the UK's direct tax system moves to one based on residence, the intention is that the IHT regime will follow suit. Now, how this is going to work in practice will be the subject of consultation, but the expectation is that worldwide assets will be in the charge to IHT for anyone who has been UK resident for 10 years. Not only that, this worldwide regime will continue to apply for a period of 10 years again after you leave the UK. Lastly, it's worth mentioning that assets settled prior to the 6th of April 2025 by a non-domiciled person will remain excluded property. In other words, it's outside the scope of IHT. So that last point is obviously really good news.
Despite that last bit of good news, I've got to say, Rachel, on the face of it, this all sounds like really bad news. And yet you are sat there chuckling away and looking remarkably cheerful about it all.
Yes, indeed. It's not that bad. Okay, so right. The first reason is that actually for a lot of affected taxpayers, there is quite a lot of silver lining in between the clouds there. So in particular, it's important, as I just mentioned, that trusts will continue to provide that IHT protection. And if you are not yet deemed domiciled, you can actually still settle assets until April 2025 and benefit from this IHT protection going forward. Now, the second silver lining is that being able to remit untaxed income and gains at a flat rate of 12% is going to be really good news, for a lot of people who have claimed the remittance basis in the past and have worried about all those funds that are kind of locked in abroad. So I think this tax rate has been quite cleverly chosen because it's low enough to make it worthwhile taking advantage of. But from the government's perspective, it's high enough to bring in, a good chunk of revenue from people who take advantage of it.
Yeah, I think that's absolutely true. We have to recognise there absolutely are going to be losers under the new rules, though. And in particular, so if you're the settlor and beneficiary of an offshore trust, you are going to have some tough decisions to make. And equally, if you've been here between 4 and 15 years as a non-dom, then there is a good chance that your tax bill will go up significantly. Now, because of that, we are already seeing clients making plans to limit the time they spend in the UK and go non-resident. But, so far from the people I've spoken to, they are in the minority. And, again, on the positive side, we do have a lot more certainty now about what will happen. It's possible that Labour will reverse these changes and do something else if they get elected, but it's hard to imagine why they would bother. Labour were looking at a 4-year period. We've got a 4-year period. Hard to see why you would. That being the case, I think we can seriously start looking at options. So, for example, if you're the settlor of an offshore trust, it might be possible to split that trust into different funds so that some of it remains protected under the old rules and some of it remains available for you to access under the new rules. I think things like that, there's going to be lots of other opportunities and possibilities for us to consider over the next few months.
Yeah, I agree. And I think it's really important not to look at the changes as being a bad thing. There are going to be decisions that need to be made, but there are going to be opportunities within this as well. We have 12 months to work out how to react, but the most important thing is to start thinking about it now. So come and talk to us, and our contact details are below. Thanks for listening. We will be back with a regular episode of Tax in 10 shortly. Bye for now.
Bye.